So we're at war, and people naturally think war is bad, and they just extrapolate in their minds how that affects them. What I'm about to say is really important. So if you understand human nature, then you understand the markets. When traumatic things happen, people tend to do one of two things: fight or flight. But there is a third. The third one is freeze. Okay, so we're at war. You shouldn't be thinking, oh, this stock is going to immediately go up. These are people are going to have more sales. Don't be thinking that. The most important thing is 99% of people in the world are going to act in fight, flight, or freeze, with the exception of you, because you're here. Fight, fight, or freeze are the three forces that will cause the normal standard things to happen during war. Right. There is a cycle when you look at all of the wars. First, within the first 30 days or so, y'all know the drill. Don't forget, this is for entertainment and informational purposes only. This is not investment advice. Do your own due diligence. I am not a financial advisor. I am not your financial advisor. Remember, all investment has a risk of loss of capital. Don't you forget that. Make sure you do your own due diligence and research, and enjoy the show. Okay. So we are at war with Iran, and you asked me a question this morning. Somebody also asked me the same question in my DMs over the weekend, and I gave them the best answer I could, but it was actually a really, really loaded answer. The question was, what does this war with Iran mean for real estate, and is it a good time to buy? And I love that question. There's a short answer, but I don't want to give the short answer because the short answer will be out of context. And there is a long answer. Before I give the long answer, we have to back up, come macro, and do a quick little macroeconomics lesson to put everything in context before we can even really fully understand how to look at this market, how to look at the economy, how to look at the world on the brink of World War III. Right. I feel like we're already in World War III, but that's another conversation for another day. So war always has short-term effects and long-term effects. The short-term effects are always cyclical and very predictive. They're cyclical and predictive based on human nature, because right now it is like literally impossible to try to price something based on the value because emotions are high. Right. Okay. So we're at war, and people naturally think war is bad, and they just extrapolate in their minds how that affects them. Not considering war in any type of traumatic situation, what do people tend to do? Right? This is why it's really important. What I'm about to say is really important. So if you understand human nature, then you understand the markets. Right. When traumatic things happen, people tend to do one of two things: fight or flight. Right. But there is a third. The third one is freeze. I added the third one. I don't even know if that's something that people say. I added the third one based on my experience, because when I have traumatic events, I don't do either fight or flight. I tend to freeze. And I noticed that most people do that as well. Okay, so we're at war. You shouldn't be thinking, oh, this stock is going to immediately go up. These are people are going to have more sales. Don't be thinking that. The most important thing is know that though 99% of people in the world are going to act in fight, flight, or freeze, with the exception of you, because you're here. We are going to move to a higher level of consciousness. If we feel fight or flight or freeze, we are going to experience it in our bodies, but also remove ourselves and try to figure out what it is. But okay, fight, fight, or freeze are the three forces that will cause the normal standard things to happen during war. Right. There is a cycle when you look at all of the wars. First, within the first 30 days or so, stocks will drop between 5 and 10%. Okay. Then after about a month, they will level off. Then after a year later, you will see that there is a return anywhere from 8 to, I've seen as high as 18%. Right. Right? So in that year, if you want to take advantage of the short term, know that this is what the cycle is going to be, and just rock out.
So would you say when people are selling off, that's them immediately start in the first stage? Is that what you're saying? Or
It's not necessarily, I wouldn't just say it's a sell-off. Just know that people are fight, flight, or freeze. So then you can say, yes, there is a sell-off, right? Or a transition from stocks, things that are more
I guess what I'm asking
sector
is that,
specific. Let me finish.
okay.
There's going to be a sell-off in the stock market to move to things that people naturally think is going to be the war go-tos, like gold, defense stocks,
Okay.
all of the war stocks.
Okay.
This is fight, flight, or freeze. So it's like, oh my goodness, fight. Oh, the market's going to do terrible. Let me get out. Let me get over here. Okay, flight. Oh, snap. I want to get out of everything. Put everything under the mattress.
Okay.
Or freeze. I don't know what to do. I'm just going to take this beating. It's inevitable. That's what they're going to do. Okay, go ahead with your next question.
No, you answered it just then. Because I was saying, or are you saying when they essentially, if everybody's like, oh, I got to get out of here, that's fight. And then flight would be what? Maybe some try to find some different alternative than what you just fought from. Maybe.
Right.
And then when you freezing, you just absolutely
just do nothing.
Nothing at all.
Nothing at all. Right. And so I know that I'm a natural freezer because I'm a natural freezer because my initial instinct is to be like, I can't predict it. Whatever.
Yeah.
And just do nothing. But again, we know that that's our natural instinct, but we can operate outside of our natural instinct, right? So the key is to become aware and say, okay, since I know this and no one else is going to, 99% of people are not going to be aware, let me take advantage. If you're a short-term guy, a person that likes to day trade, do the markets, keep in mind, everybody's going to be fearful right now and move accordingly. I'm not a short-term public markets type of human being. So I'm always going to be thinking macro, long-term, private markets.
Right.
Okay. But in the short term, you're always going to have huge surges in defense stocks. We already know that oil is going to be going up, is up.
I went to go get gas this morning. It was up 60 cents.
Gas was up
like 3.59. It was like 4.30 or 4.25 today.
That is, and that's my whole point. Know that everyone's going to be reacting emotionally. It's no way that war could affect the supply of oil that fast.
Right.
That doesn't even make sense. That's so weird. Humans are so weird in that way. That's so strange. It's irrational. Okay? All right. So if we know that humans are going to do that, just keep that in mind. You day traders, pay attention. Keep your eye on them charts. Don't get up. Don't go poop. Don't go do nothing. Pay attention. It's jumping. Me, on the other hand, y'all have at it. Because the real play, when you understand human nature, you can better predict long term. And I'm gonna tell you why people go to fight, flight, or freeze. People go to fight, flight, or freeze because they think that war or these events are unusual. Because it's not normal for you right now, you go fight, flight, or freeze. Like it's not, your immediate have no context. But this is why I like to study history and I like to read the scriptures. Humans are always at war. This is why when we had the conversation, we'll get to that part where you was just like freaking out, like, I think everything is going to go crazy. And I was like, I want to wait to get to say to you, this is not unusual. Humans are always at war. Now, to go even more in depth, we have a newsletter where I break down structurally interesting things that really move the market. I give you my frameworks for how I think specifically about business, because you need to understand business to understand this stuff. Also, too, y'all know I have partners for our private equity fund, and they contribute to the newsletter too. They know their stuff with apartment investing. Noelle Parnell and Arthur Lyons. Get on the newsletter. The link will be down below. It is 100% free. This is why when we had the conversation, we'll get to that part where you was just like freaking out, like, I think everything is going to go crazy. And I was like, I want to wait to get to say to you, this is not unusual. Humans are always at war. What was happening in Genesis? What is 90% of Genesis about?
Are you asking me right
Yeah,
now?
I'm asking you.
Genesis, 90% of Genesis?
When you talk about Genesis, okay, so we got the first 2 or 3 chapters is about like how God created the heavens and the earth. Then after that, let's go to Abraham. Abraham on down, Noah, all of
You're going to
them.
have to slow walk me through this one.
No, this is go from Abraham. Just think about Abraham. What defined his life? Noah, Moses, David, or Saul, David, Samuel, Esther, the rest of the kings. What was it all about? All those people, what were their lives defined by?
Warfare. I might need to go back and read my good book then, because all that was in Genesis?
Yes. Well, no, after we get out of Moses, after Moses, then the rest of it is
Okay, yeah.
Exodus and then
Yeah, warfare.
war. Okay? This not new. Nothing is new happening under the sun right now. So everybody's fight, or freezing because they're scared because it's like, oh my God, we're at war. This is normal. This is par for the course. So what are you going to do? Are you going to cry and react emotionally? Because somebody else also made a comment on TikTok. I love this comment. Let me just also be very, very clear, everybody. 99% of the comments are positive, and I fool with y'all. There, we got a follower who's been running it up, giving super chats on YouTube. Steve, I told you to DM me on Instagram. Steve, DM me on Instagram because I got a gift for you. Okay, so if you want to get it, if you want to shout out to Steve, I replied to you. I said DM me. I replied to you twice. DM me on Instagram because I got a gift for you. And if you want a gift, super chat us up. Okay, I'm here for it, and I'm always down to give away free things. What's up?
You gonna ask them? I think that would be a perfect segue to ask which of the F's they in.
Oh yeah, okay. Thank you. Brandon wanted me to ask y'all before I'm bringing this to you guys' attention. What F, if you can just be really, really honest, let me know down in the comment. What F, okay, you heard about war. Which F are you? Do you naturally respond to trauma or catastrophic events or anything major happening in your life, negative happening in your life? Is it fight, or freeze? Let me know down in the chat. Like I said, I'm freeze. I'm freezing all day, every day.
I'm fight immediately.
You fight
We're
immediately.
Don't sometimes. We're just fighting.
The crazy thing about me is I fight when I wake up. Like I always have, like if something bad happens to me, I have this moment. It makes me think about in the scripture where it says, David strengthened himself in the Lord. I will intentionally, like after I realize I'm freezing, I have to strengthen myself in the Lord and I'm fight. Like you don't want to, because I'm so clear headed, I'm fight all day once I get clear headed. Okay. Anyways, somebody said a comment about on my post about Mexico where they was like, so instead of, basically mourning all these people dying, we gonna make profit out of war. And my response to him was, okay, let's live inside of this reality that we should be freedom fighters. Where are you going to get the resources to fight? Like, what are you going to do about it? You just want to be an internet thug and type away about it? Or, because I'm going to tell you right now, you're going to go up against the Mexican government, you're going to go up against the cartel, you're going to go up against, like, what are you going to do? Or you just want to cry about it on the internet?
Yeah.
Right? Or your other opportunity is to say, you know what, these event-driven experiences do create opportunity so that if you do feel like it is your calling to be a freedom fighter, you can use this because they are so predictable. You can use this as an opportunity to position yourself to be a freedom fighter.
Right.
Now, again, are we trying to make money from war? Are we like, hey, let's go to war so we can make money? No, they are just natural things that happen in human history. And this is why so much of the Bible and history is about war, because we have so much data to predict how things are going to go. When things are peaceful, you don't know what's going to happen. Especially right now, we've been talking about volatility, but like War introduces volatility, but volatility that can be predicted. It seems volatile to the naked eye, but we're going to talk about the phase, the stages. Okay? So, like I mentioned, the first stage, stocks will drop. After about a month, it'll level off.
Right.
And then over the next year, it'll be a slow climb. Outside of that time frame, whatever this is that we're in will start to be normal, and people will do commerce as business around whatever our new normal is. This is when you kick in for real, for real. You can make money on them short-term swings for sure, for sure. But this is where you kick in for real. This is where the wealth is built. But specifically with this war, since we're in the war with Iran, we already know that that's going to affect oil prices on the short term and the long term. So we know that the instability over there is going to affect things. Oil may be elevated for a little while, because the whole point is that then, the U.S. can get control over there and control the oil. But at least for a little while. So if oil is going to be elevated, and you're going to have to decide and look at what's happening in the world to see how long it's going to be elevated. If oil is elevated prices of oil always lead to higher inflation. Always. Because energy is a huge component of our CPI. Okay? Because it affects so many things, not just energy itself. Higher inflation means higher interest rates. So right now, you already know we've been fighting the good fight for affordability. Because I want you to think about affordability like this. Don't think about affordability in the price of a home. Think about affordability in a mortgage payment, because that is how Americans see things. Paychecks. So if my mortgage payment is, or I can afford $2,000 in mortgage, it doesn't matter what the mix is between interest and principal. That interest was a great way that we were trying to attack affordability, that interest component. If we can get rates come down, then the interest component can come down, and thus your mortgage can come down.
Right.
But we haven't been able to get rates to come down. They've been sub 6% for maybe a couple weeks or a week or something like that. Great. That's cute. But if oil goes up and inflation goes up, they're not going to want to cut interest rates further. I don't care if a hawk is the Fed chair or Dove is the Fed chair. Doesn't matter. Hey, we cannot have sustained, or they're going to try to fight inflation. It's always going to be number one, no matter what.
Right.
Okay, so here we are back facing high interest rates again. So we have not been able to get these interest rates to come down. What's the other component of your mortgage payment? The principal. The principal is dictated by the price of the home. Okay. So that means we gotta get home prices down. We at war, interest rates gonna be high, at least in the medium term.
Yeah.
Home prices, we've been fighting it. Even our boy DT got on there and said, listen, I don't want home prices to come down, because that is the biggest store of American wealth, is in their homes, of American families, in your home. So if you're walking around here knowing like, dang, I got $1 million worth of equity in my home, and let's bring it down. I got $200,000 worth of equity in my home, so therefore I have a net worth of $200,000.
Right.
Maybe 200 plus the 100 in your 401k.
Right.
If home prices come down, that affects your equity.
Right.
Your equity then went from $200,000 down to 100. I'm just making numbers up. Down to 100. Your net worth has come down. Okay? So this is why we didn't want prices to come down, but prices, there is no, I feel like all these happenings in the world was all for us to avoid prices come down. Because guess what? We do not forget, during COVID, home prices went up 40%. The average price of a home went up 40%.
Crazy.
We are due for a correction. And in the stock market, when a stock goes up and then we wait for the price to come down, that's called a correction. When the same thing happens in real estate, it's not called a correction. They'll call it a correction. But when it happens, guess what it's called?
I don't know, because you about to enlighten me right now.
I'm not. We have this. It's called a bubble bursting.
Okay. We had this conversation.
We did. It's called a bubble bursting. We just had a bubble burst in 2008. Everybody was it affected everybody emotionally to the point where we have done all of these things to avoid it. We're so afraid of it. Guess what? It's inevitable. It happens. This is the version of, hey, inflation's up, home prices got to come down, all these things. The government's version of their reaction to it is fight, flight, or freeze. And they fought.
Yeah.
And fought.
Yeah.
And fought. And fought. And fought. And fought. All the way to the point, here we are back again. Now we back to home prices coming back down and the bubble bursting because we are so afraid of what happened in 2008.
The 2008 recession.
Yes. It was just yesterday. And it's like, we're so afraid of it happening because also it's like, dang, we didn't learn our lesson.
It lasted 18 months. Started in December, ended in like June 2009.
Okay. So here we are. Now we're moving into the meat and potatoes of what the Iran war means for real estate. The specific question that you asked me and this person asked me, I just gave a general question. Both of y'all asked me the same question. Is now a good time to buy?
Yeah, that's what I asked you earlier. I said, because you made the term and said it is a buyer's market.
Buyer's market.
And then I was asking you, like, what does that even mean? I'm like, I told you when you said that to me, my mind immediately went to producer and consumer.
Yeah, we're not going to go down that road. Hold on. Let's just tell everybody. Brandon had me frustrated. He had me frustrated. I was like, what? Okay. Let me explain. And then what I'm saying, you go back and you ask questions. Okay. So is right now a good time to buy if you are a homeowner or you buy a residential purchaser or you're an investor?
Right.
It depends on how much you understand the market and what you think is going to happen. Okay? It is technically a buyer's market. But you can't just say it's a buyer's market, let me go out and buy. You have to make a prediction about where you think the market is going to be on your exit plan. Right? So if you're an investor and your exit plan is to refinance after you rehab a property,
Okay.
or if your exit plan is to actually go ahead and you're buying turnkeys and your exit plan is to just hold it, right? Or if your exit plan is to flip it, you have to say, this is what I think will happen at this time when my exit plan or when I have a material event like a refinance or something like that.
Correct.
Okay?
Okay.
That will determine if it's a good time to buy, but that's not even the right question. What do I buy at? Because home prices are negotiable, right?
Right.
Not like stock prices. It's negotiable. So let's say, for instance, I'm telling y'all right now, prices have not come down the way that they are going to come down.
I don't think so neither.
Okay, good. As long as we're on that same page.
Yeah.
If you believe that, based on everything that I just said, if you buy at someone's asking, it is a terrible time to buy because prices haven't come down yet. You're going to buy now, even if it came down just a little bit, knowing that it's going to come down more, right? You don't buy high and sell low. Okay? So the reason that you need to make a prediction about what you think the price is going to be is because prices are negotiable. You need to offer based on what you think things are going to look like at your material event that would put you in the black.
Okay.
Okay. So let's say I gave an example when we were talking earlier. Let's say for instance, you're a rehabber, okay? And there is a property on the market for $150,000. I'm not going to write this down. You get a pen and paper out if you want. I'm not. In order to do this podcast, it has to be simple. So I'm not going to sketch anything down, okay? Let's say you want to buy a property that the ARV is $300,000. The after repair value is $300,000.
Okay.
And Miss Jane is selling it for $150,000. And let's say the rehab costs are $75,000.
Okay.
Okay? And that's still a good deal, right? You would make 75,
Right.
right? If you sell it or whatever. Let's say you want to sell it. Okay. You make 75. That's not terrible. Okay. But then you know that you're not going to be able to sell it for at least a year. If you're a good flipper, I know people been in and out in 3 months. But let's just pretend like your normal flipper, it's going to take you a year to rehab this property, okay? If you buy at those numbers, you are saying that the property will be worth $300,000 in a year. That's where it's going to be in a year. But we just said that we think home prices are going to come down. Okay?
Right.
So those numbers don't work. You have to say, what do you think the AR is going to be? I know you don't want to make any guesses, but you're going to have to put your thinking cap on and say, what do I think the AR is going to be, knowing that we are in this critical point in real estate right now? What do I think the ARV is going to be in a year? ARV is going to be in a year. All right? That number, I'm telling you right now, whatever you think it is, if you look at it unemotionally, it is going to be drastically much lower. The government they have done all that they can to keep prices at this inflated number.
So
This is Nicole's opinion. I think in the next year we are going to see something drastic for residential homes. Values, everything is going to be repriced like nobody's business. That is my opinion. Now, if you think it's going to come down 5%, that's okay. I'm okay with that. Neither one of us got a crystal ball. But you got to make the predict. You can't just go fly blind and be like, I don't know what to do. The writing's on the wall.
Right. You saying based upon what you've seen.
Right. Also, too, you're going to have to make a prediction if you're going to refinance, or even if you're going to sell it to a residential buyer. You still need to understand what you think rates are, because you got to know what their mortgage payment is going to be. And who are you going to be marketing this to? If you think rates are going to stay elevated, or we might even get a bump. We're at war. This wasn't in the plan.
Yeah.
We might even get a bump.
Yeah.
What is that mortgage payment going to be? And who is that buyer? Also, keep in mind that buyer that you're having in your mind, that job might not even exist in a year. So that person, this doesn't exist.
Yeah.
You got to think, you have to make some predictions about what you think income is going to be, what you think unemployment is going to be, what you think rates are going to be, and think in terms of a mortgage. You have to do the same thing if you're going to burr the property and put a tenant in there. You have to think the same thing if you're going to refinance it in a year. You got to put all this into a spreadsheet. Get an amortization calculator. It's not difficult. Google's right on the Google card right now. Put all of that in there. What do you think is going to happen? Now, let's say, for instance, you like, dang, I really do believe, we're going to use an extreme example. I really do believe that the value of this property the ARV is going to be $200,000 as opposed to $300,000 in a year. Using an extreme example. It's possible, but it's extreme. Okay? I think it's going to be $200,000. And I'm going to keep this very, very simple. I don't want to talk about interest rates right now. We just pretend like it's a flip, okay? I think it's going to be $200,000.
From purchasing it at 150.
We're not going to purchase, but this is what she's offering it at.
Yeah.
That's what her asking is.
Yeah, at an asking of 150, and then the ARV will be 200.
I think it's going to be 200. This is what you're saying.
Very thin margin.
It's not a thin margin because you haven't offered her anything yet.
Well, I'm just saying. Well,
it's not even, the deal doesn't work at that.
Yeah.
It doesn't work, is what I'm saying. So, because the question is, should I buy right now? A normal person would look at that and say, no, I shouldn't buy. But a real estate investor will look at that and say, Miss Jane, I respect this, but this is what's going to happen. The value is going to drop, and these are the parameters in which I'm investing in. And here is what my rehab costs are going to be. So based on my rehab costs, $200,000, I'm going to back out 75 of my rehab costs. I got to make a little bit of profit. I don't have my calculator with me, but like on a deal like that, you're going to make, let's say 70%, so 30. You want to make 60 grand. This deal is awful. So like 200 minus 60 is 140 minus the 75 of rehab costs that you got to put in there was 140 minus 75 minus 30, 65. Okay. I hope that math is right.
That math is math.
The math is
y'all check me
65. So guess what? Miss Jane, my offer, you're supposed to take out a little bit for miscellaneous and plus that's a 70% deal. You might want to do 65%. For real, Miss Jane, the best I can do is 65 right now. Guess what she can say? No. So, but guess what? She might say yes. I gotta go. I'm trying to move to China. I want to get out of here. These Americans is crazy. Maybe Miss Jane is Chinese and she's scared. I got to go. Sure. So the question is it a good time to buy? Yes. It depends on what you think is going to happen, your ability to put out offers to reflect what you think is going to happen, and whether it happens or not.
Yeah. That's a good breakdown. That's a very well. Yeah.
You right. Also, too, it is a buyer's market. Miss Jane house been sitting on a market at 150 for 8 months. You don't know her mortgage is. Her mortgage might have $30,000 left in her mortgage. Shh, listen, I ain't had no offers. Take it and run. It's a buyer's market. Is it time to buy? Yes, but not at the prices. Everything is negotiable. Put an offer out. They say no, it's cool. That's why one of the things as real estate investors, if you're going to be a real estate investor, that's why one of the things that one of our metrics, our KPIs, is how many offers do you make a day, right? So if you're like really, really going ham, it's like, I want to put out 20 offers a day. Depends on how many hours you got because you got to analyze the deals and all that stuff. I mean, we got chat right now. You can give chat your parameters. Like, hey, chat, I'm going to feed you a spreadsheet of deals. I need you to analyze these and based on, I want to do 60%. I want these deals to be 60% deals. Like have a whole conversation with it. Put the spreadsheet in and say, hey, give me the offers. And then, hire a VA to call. I was about to cuss. Hire the VA to call everybody with the number. And then you just pick it up after they're done.
So to ask you a question in a stirring the pot kind of way, because so it is essentially interest rates not dropping. You really can't afford to drop because
hold on.
Well,
let's be clear. You say can't drop. Donald Trump is a wild bull.
Yeah,
and we don't know what him Team
that's
Warsh
that Philly coming up with wild bull.
wild bull. We don't know what Team Trump Warsh going to do.
Right, right.
So okay, unlikely. Go ahead. It's unlikely.
Unlikely. Okay, let's put the hypotheticals on there. If rates were to remain at a constant and not come down, but the cost of buying a home comes down, which creates a buyer's market to buy a home, but then from a borrower standpoint, yes, is it a good time to buy a home, but does that mean it's a good time
To get a
borrow?
mortgage.
Yeah.
I mean, it depends on what you think is going to happen with rates. I don't think we're going to see 2%, 3% rates for a little minute.
Mm-hmm.
If we do, we're just going to have some crazy inflation. Like, it's going to be a problem. We're just not going to see that for a minute. That's just my opinion.
Right.
What do you think is going to happen? Again, remember, people don't think like that. They think in terms of mortgages.
Right.
Right? So, it's what do you think?
Yeah. Yeah.
Here's the other thing too. This is why I keep saying this. I've been saying this on my social media. I'm sure I've said this on this channel. Probably so long ago you don't remember. But right, the cost of buying a home is a mixture of interest and principal, right, in the mortgage payment. But there are a bunch of other fees in there as well. Mm-hmm. On the closing side, is a lot of other things that go into the cost of a home. Mm-hmm. A big component of the cost is agent fees. Mm-hmm. And I don't know how to stress this enough to all you agents and mortgage or loan originators. AI is coming for your job, especially in the wake of unaffordability. Mm-hmm. Because if I am a savvy buyer, I just saw a post on Instagram where a guy was like, I bought my amazing home without an agent using AI. Here's how I did it. Mm-hmm. And all the agents was in the back and in the bottom talking about some, well, what are you going to do when you got to negotiate with the inspector and like all these soft skills that AI agents can do. That's what they're called, agents as well. Yeah. Yeah. These soft skills that AI agents can do, not only can they do, but they can coach someone through doing it for themselves. Mm-hmm. Hey, AI, here are the pictures of the home. I'm not recommending that anybody do this, and I'm not trying to take away the value, but what I'm saying is people are super incentivized to price you out of the transaction because they can't afford the homes. And you taking up 3%. That's a big chunk. 3.5%, whatever y'all be taking up. Then the loan originator, fam, put me on the phone with the administrative person to handle. I don't want to talk to you. What paperwork do you need? Here I have it. Hey, chat, what paperwork will I need and how do I need to organize it and what do I need to do to make sure I can get this loan to the finish line? I want to get I'm going to give you all a perfect example. Here's a perfect example. I have a cousin who is, he's 6 years younger than me. I'm 42, minus 6, you do the math, okay? It's my baby, okay? You ever have a cousin that's your baby when they came in the world? Like, that's my little baby doll, all right? And my cousin is, he's a car fanatic. By the time he was 22, one time we counted how many cars he had. He had owned about 30 cars at that point. Like, he knows how, he's just a car fanatic. Like, right now, I think he owns he just bought I know it's not an Aston Martin because he bought his Aston Martin a little while ago. But he knows how to, he just buys cars, flips it. He knows which cars to get to keep the equity. Like, that's my baby. Yeah. I'm so proud of him. More of the story is because he knows he's done the process so many times. Every time I go to buy a car, one of the things I hate is waiting around in the dealership.
Right.
And so I always will say, hey, Ricky, I'm going to buy a car. He knows how to find the car on the internet, tells me exactly what to do, call the person, get off the phone with the person, start texting them, negotiate with them, and tell them, hey, when I'm coming to pick it up, I only got 20 minutes. Make it do what it do. I do not want to go in with the finance department because when you go in with you go in the room with the finance department and last time the guy was like, that's our policy. You got to go in there. I guess by the time I got there, they was like, no, they know too much. They're not going to buy all this bull crap because he knows what cars to buy. So you won't need to get all these extra insurances. This is my whole point.
Yeah.
I didn't need to go into the finance department. So that person, they get a commission of selling you gap insurance, tire insurance, all this stuff. Right? Because I did know with certain insurances that I did want to get. Like if you buy certain cars, you don't need a gap insurance and you get it at a certain interest rate, you don't need gap insurance. So my whole point that I'm making is Ricky was my AI.
Yeah.
I walked in and walked out in 20 minutes. Literally walked. There was some things that needed my wet signature. I walked out in 20 minutes with a car. I bought a Lexus. What do I need to test drive a brand new Lexus for? One of the best riding experience vehicles. I'm getting a mobile. I don't need to bust corners. you know what I'm saying?
Yeah.
So, Ricky, I want you to think about as an agent how Ricky just removed the finance department for me.
Yeah.
That is what an AI will do. That is how, because I didn't want to sit in there and I knew that this was my floor or my ceiling for how much I wanted to spend. People are going, there's an affordability issue. They're going to get crafty with how to cut you out.
Yeah.
And they're going to go to chat and say, chat, I don't want to use an agent. What are the questions that I need to ask at this stage? What are the questions I need to ask at that stage? Okay, you don't want to chat? Use Claude. I don't care who you use, but the AI can help do your job.
Yeah.
Figure it out. You got about maybe 18 months. Not to mention, Zillow is working hard to get you out of here.
Yeah, we were talking about that this morning.
They just not only is Zillow working hard to get you out of here, they got new rules that they're about to roll out for agents and new laws that go into effect, I think like April 1, that put boundaries on how you can market yourself. Because that's really all the agent is a great marketer. There are boundaries, there are certain parameters, there's certain things you can and cannot say. You can't say, I know for a fact that, or let me not say fact. I know that one of the things that you can't say is I am a $1 million producer. You're not going to be able to say that no more. All this thing is coming out of pipe to put you out of business. And I'm not saying this to go in about agents. I'm saying this to go in about how supply, demand, pricing works. People gotta live. They gotta live somewhere. They're either going to go to apartment buildings or they're going to go to single family homes and squeeze out the agent and put low ball offers in. That's the price. That's the price. Then once that person figures out how to do that, maybe we all know how to do it. Now we all know how to do it. Okay, with that being said, I want to go to something that we ended last episode with, but I want to bring it back here again because you talked about this. I want to talk about what can we do about all of this.
Right.
Now that I've laid out the landscape for you, oil, energy, real estate, what are the picks and shovels that you can go after for this?
Okay.
You pulled something up that I said, well, I covered this already when you said in real estate, okay, well, service the landlords, figure out property management businesses. What are the other businesses? I've been said all this and I did not use chat, okay? Picks and shovels because it's just going to be so cumbersome to do business in real estate. Being a contractor, with all of this, we didn't even talk about this. With all of this, contractor prices and prices for supplies is going to go through the roof.
Yeah.
And guess what? People got to pay it. The only thing that's going to slow you down is the fact that there will be less rehab jobs. But if you're good at what you do, we always need contractors. What are you talking about?
You always need the supplies.
Always going to need the supplies. Other things too, I want you to think about. You see how I just laid all this out? This is all a change of human behavior. What do you think is going to be a change in human behavior as a result of war? Look at history. Give the picks and shovels for the change. Those are the businesses. Now, some of y'all is like, oh, there's so many possibilities. I want to say this is something I never talked about before. And every time I go and watch my old episodes or the replays or whatever, watch on YouTube, I always think like, I don't ever talk about this. Is as we're assessing the picks and shovels, you need to find the intersection of where the picks and shovels meet your purpose. Your purpose, also your passion. This is a play. It's another version of what Jim Collins calls the hedgehog concept in Good to Great book. There is also another concept in Japanese culture called ikagi. Ikagi. Look that up to make sure I spell it right.
IK.
Ikagi. Okay.
Ikagi. IK.
Did I spell it right?
IKIGAI.
Okay. Ikigai. Something like that. I don't know how you pronounce it. But when I present all of this to you and you think about all these different investing opportunities, especially the ones that are outside of the stock market, you always want to get yourself in the flow of God by getting yourself in the flow of your purpose. And clues to your purpose is your passion. And you can use my framework, which is like, where does your purpose meet your passion, meet the opportunity, where something that can be monetized? You can use the hedgehog concept framework. They say your hedgehog concept is the financial engine versus your passion versus, I can't remember what the third one is, but the reason I don't particularly, mine is not the same as hedgehog concept is because his talks about passion. Your passion can change, and God don't got to get behind your passion.
Right.
God will always get behind your purpose. So it's important to understand, or at least be on the lookout for what your purpose is, right? And then Ikage, it takes like 6 or so circles, different things. And you can use these frameworks to figure out, like, now we know where the opportunity is. You can't just do anything in the opportunity. That doesn't mean it's going to be blessed. You want to get in the flow. And also too, like, we're at war. I don't want you to think that this is good, but you need to understand that this is what happens, and you need to regulate your nervous system in it. Because it is just what humans do.
Yeah.
Humans go to war, and that cannot shake your core.
Yeah. That's a bar, what you said, though. God don't have to get behind your passion.
But your purpose is his purpose. You get behind the purpose. You get in his plan.
Bar.
Okay? So that's how I want you to take all this stuff and then run it through one of those frameworks. I don't care.
That's how you can control that nervous system at that point with that framework.
Because you're just like, all this stuff don't matter.
Right.
I'm on a mission.
Right.
All the fires is going on. You just walking. That's why David said, yea, though I walk through the valley of the shadow of death. Through the valley of the shadow of death.
Wake them up.
Think about what that means. Not death. I'm in the shadow of it. It's not bothering. It's not really affecting me. Okay? I fear no evil. Okay, let's get back to business. Some of the other things that you need to be thinking about in war. Gold is always a safe haven. The one that has not been tested yet is Bitcoin.
Right.
So you got to be thinking about that as well. There's always going to be layoff risk in some of the more trendy sectors. Tech. AI is tech. There's going to be layoff risk in things that are not like commodities, in areas that's not like things that are human need. And expect, if you have a traditional business, I don't know how to define traditional business, but like a business that doesn't necessarily make money off the picks and shovels of all of this, just expect slower sales. You just want to build up your cash reserves. Start being really, really conservative right now.
Yeah.
Right, like if let's say this war becomes like a whole big thing and like y'all really, really love this episode. I feel like this business, this page is a pick and shovel. You already know how I feel about our private equity fund. Our fund is a pick and shovel, but I'm going to stick in this lane for this YouTube page. This is a pick and shovel in a sense that if war, while we're at war and while this stuff is going on, y'all always going to want to get commentary on it. It's a pick and shovel. I got some other stuff that's coming on this channel too that I cannot wait to bring to y'all. Just giving y'all picks and shovels. So if you have a business that you know isn't, you got to be honest. And it's okay to have a business that's not picks and shovels. You've been in the business for a long time. You didn't know this was going to happen. You just got to get conservative right now. And if you don't have slower sales, great. What a surprise. Cherry on top.
So in the midst of what's going on, in the midst of the times, the 3 F's, the fight, flight, or freeze.
Two things about the free F's. One, be mindful of where you're at specifically right now as of recording this on March 2nd, right? Be mindful of where you're at. Rise above it, but also remember that 99% of people they're not even going to be conscious of their fight, flight, or freeze. They're just going to react. And they're not going to be able, most of them aren't going to be able to step outside of it. So you have an advantage because you can predict what everybody else is going to do.
So my question is, what is Nicole Purvy going to do to prepare for what's to come?
The same thing I've been telling you guys, the real play is apartment investing. This is why we have a fund where we are investing in apartment buildings, and you are welcome to join with us, okay? We are only taking accredited investors, but we invest in apartment buildings in Atlanta, Dallas, Houston, and assisted living facilities in the Northeast region where we are adding mental wellness amenities. It is a fund like no other. Because this is just going to be the way. If people can't afford it, home prices are going to come down, and also people are going to be moving into apartment buildings, and there will be a new class, well, not necessarily a new class, there'll be a growing class of people who want more quality amenities. If you want to invest in apartment buildings and take advantage of it, come get with us. Our fund is paying 20% IRR, 2.5x equity multiple, 5 to 7 year hold term, and it's really, the writing's on the wall, y'all.
Picks and shovels.
Picks and shovels. Picks and shovels. Because one thing is people got to live somewhere. They need house until they figure out how to take your body out and put it into a jar when it's time to go to sleep.
Okay, Orlando Brown.
Oh, did you send that to me?
Yeah.
He just be all scatterbrained. So they figure out how to take your body out and put it into a host. You gotta have a place to live. People gotta have a place to live. Where do you think they're gonna live? Apartment buildings. I hope you know that that's the answer. So if you are interested, DM me on Instagram. I am Nicole Purvy on Instagram. Follow me over there. I'll be having fun too. And yeah. Right. There are other options. Put my picture of my baby in.
I feel like I'm turning into one of these
Conspiracy theorists?
guys,
Yeah,
man.
everybody
We
is.
don't have that much time. That's what I want to be.
Well, part of it, the problem is I influence your algorithm.
I don't have this much time anymore.
I influence because I'll be sending some crazy conspiracy theories. And now my algorithm, at one point it was at a sweet spot. It is out of control right now. The algorithm be testing me because it be sending me like borderline racist stuff now. And I'm like, bro, chill. Chill. Why? I be wanting to be like,
That's a whole nother
why
thing.
would you send me this? And that racist in the way, racist on both ends. Like, you think I'm going to comment on these people talking about black people? I ain't getting ate up in these comments. You're not roping me in. I'll get my notifications coming forever. Go back to Africa, Moki.
Don't send me those, okay? Don't send me those.
I just look. I'll be when my algorithm get it. I'll be like this.
Did you say go back to
That's what they'll say to me. No, that's the type of post I'll be getting.
Okay.
When I get it, I'll be like this. Because I'll be curious, like, but I'll be like, do not interact, do no engagement, because I don't want the algorithm to think I like it.
Yeah.
I'll be like
It's coming
tiptoeing,
from
like,
somewhere, though. Somebody.
it's testing me to see if like, you kind of seem like a Republican, but then you seem like a Democrat. Then you seem like far right. Then you seem like far left. Which one are you? We need to. No, I told you I'll be tiptoeing.
Don't do it.
I'll be tiptoeing.